stocks are down big time. The Dow is off about 160 points. There's the big board again. Steve Russolillo is here to talk to us about this. Did you take your eye off the market today or something and it just dropped?
It was ugly. It was ugly today, and it came after a pretty decent rally yesterday, which quickly vanished. And so the big concern, obviously, is Europe, and people are really paying close attention to those bond yields in Spain and Italy. Again, Spanish bond yields are up above 6%, inching closer to 7%.
That's the cost of borrowing money for the Spanish government is over 6%, which is a lot more than elsewhere. Now, there was a plan that came out this morning, or overnight, I guess, to sort of solve the banking problems of Europe. And this is the investor reaction. Big thumbs down.
Big thumbs down, exactly. I mean, essentially it was to create a banking union. And yeah, it's good to kind of share the burden toward any sort of situation that may unravel any sort of bailout or just kind of have each other's backs in a sense. And yeah, you're right. I mean, it got a big thumbs down in the market. It's funny because once it was announced early this morning, markets actually rose a little bit. European stocks came up a little. U.S. stock futures were up. It looked like, oh, maybe this could be a short-term plan that could kind of solve things. Nope, not at all. That's exactly how investors reacted today. And so it seems like we're getting past the point of short-term fixes here. And people want to see real resolutions. And we're not getting that anytime soon. We're not getting it now, and the big fear is that we're not going to get that anytime soon.
So explain to us, I mean, European stocks, I can understand being down. The problems are in Europe. We're in the U.S. U.S. stocks are down. Join the dots.
It's a global economy, son.
It's a global economy, but I keep hearing from people that, okay, the U.S. is growing, we're not in recession, Europe is in recession. So why do the U.S. stocks down?
I mean, the big worry is that, the U.S. economy is just muddling along. It's not like we have fantastic growth here. And so if things get really bad in Europe, they are going to erupt across the world. And you're just seeing that in U.S. stocks, you're seeing that in global stocks, you're seeing that in just markets in general.
So you'll be able to hide wherever you're living, like in Brooklyn or San Francisco. Wherever it is. So oil was down hugely, about $3 today, which is a huge move on it. There it is, down 3.5%. What gives?
It's in a bear market now. Oil is now down 20% from its peak, which was around 120. It's just, this is all part of the, as we were just mentioning, the coordinated action. All the markets are sort of intertwined together, and you're seeing stocks are selling off big time. You're seeing the euro is way down. The U.S. dollar is really the only asset that's benefiting right now. But oil in particular is getting hit especially hard, and that's being reflected in energy stocks. Energy stocks were also some of the biggest decliners today. So, all in all, big risk-off day just across the board, and it doesn't look like things are changing in Europe.
So don't open the 401k statement is what you're saying. Don't open your IRA account.